We mentioned Jamie Dimon, the J.P. Morgan CEO, sitting down with our own Becky Quick earlier today, commenting on the markets.
There are a lot of things happening that may even come together the wrong way in late 2020 and 2021. It's possible, we've had, and this is another very important thing, 20% growth over 10 years. It should have been 40%. That anemic growth is part of the reason you have lower capital expenditures, that we didn't create enough high-paying jobs, that people didn't have enough opportunity. And it's like not the tail end of the cycle, but it's possible this acceleration we're seeing is traditional for the last third of a cycle. So it's possible we've got 3 years left.
Booyah! Oh, there you have it. We have a Cramer alert for more on that and this wild day. Let's bring in CNBC's Jim Cramer. He's live from the Mad Money studio tonight. Jim, you got the positive comments there from Dimon. I hope you listened to Lee on the halftime report earlier. What do you make of the way things unfolded today?
I thought Lee really helped the market. I was watching and seeing how the market just kind of bottomed because you needed a calming voice. And Lee's basically talking about the mechanics of the market not working well and then creating some value. But also what he talked about was driving people away. And that's what the stock market does. And the SEC doesn't view it as its job to figure out whether it's a level playing field between individuals, institutions, or fast money or slow money or algorithmic money. And it's a shame because it used to be a great way to make money. And it's just consistently driven people off or made them think that you only can do ETFs. And it's really a shame. Jamie, I think Jamie's a great banker, but there is weakening housing. There's weakening electricity use. There's weakening autos, weakening construction. We got weakening chemical, weakening paper. We got weakening oil. Altogether, yes, there's some good, but we have to admit there's some bad. So the idea that the Fed does one and then waits, I'm fine with. But I'm not fine with the idea that the Fed says we just got to keep going because that's too much weakness. It really should be a little more measured. The Fed has to be a little less rash. No one likes to criticize the Fed. I don't understand that at all. I mean, we're perfectly willing to say that a Green Bay coach should be fired even though he's in a bunch of NFC championships and he's a Super Bowl winner. But we can't say anything about a Fed chief who on October 3rd comes out and says the wrong thing, that the economy is really strong. It may be the weakest moment. I'm sorry. These are people who put their pants on one leg at a time. We have every right to be able to criticize them and we should not let them just go by idly. They know nothing when they often know nothing.
Today feel like a bottom to you, Jim, the way that stocks rebounded by 700 points?
Let's put it this way. I like the fact that obviously the mechanics of the market were weird in terms of the day off and what happened with the futures. I was disturbed by the fact that there must be something really going wrong, frankly, at Huawei, that the Canadians would do our bidding. I mean, this must be some serious indication of guilt there. That helps the cold warriors in the White House, not the trade warriors. But you know what? Let's talk about Facebook. Wait, Facebook has got to be the most reviled stock of our time, right? And there was a big downgrade, and the stock was really bad, and the stock rallied. When stocks rally on downgrades, that's a positive sign. But yes, if the Fed says the wrong thing and the president's a little peripatetic, that's a great understatement. There's a lot of things that seem to make the algos go wrong. So you got to pick your spots. I mean, Facebook was probably proved to be a great buy today. The fact that Apple didn't finish at its low was odd. The fact that Broadcom reported a monster quarter after the close is probably the company that's most involved and most in the crosshairs with China after Huawei. I don't know. These were positives. These were positives. But the most positive thing was your interview with Lee, because they don't want to they don't want to bring back the uptick rule. They being the institutions that love to be able to go in and out of stocks. There's too much money being made betting against the individual and betting with the institutions. And I hate that, Scott. Yeah. That's why it's a great interview.
No, thank you. In light of all this, Jim, what do you have coming up in about 45?
Okay, I have probably the best acting stock in America today, which is Yum. It's been a buy every time it's down. U.S. Concrete, we'll talk about a great read on the economy. And then I've got a stock that's down a remarkable amount that was one of the hottest stocks in the market, Ollie's Bargain Outlet. And I've got to tell you, all three, well, Bill Sandbrook, that's a tough one, U.S. Concrete, it was up. But you listen to Creed and you listen to Butler, and you're going to want to buy their stocks, and I encourage you to do so. And we got to find out what happened in Canada. Scott, I mean, that was just an episode of 24, maybe season 5 or 6.
Yeah. I suspect we're going to find out more in the days ahead.
She's released her own recognizance. Can you imagine what will happen with these stocks?
Yeah. Jim, we appreciate it as always. We'll be with you at top of the hour. Again, Mad Money, 6 p.m. Do not miss Jim's show, talking all about what happened today and where we may go from here.